Hi guys, I'm Rob. Welcome to the Builder Investor Podcast. Today we've got Nic Clark. He's come over. Where have you come from today, Nick?
Come from York today.
Come from York, so he's had a fair old drive down into Stoke. So we're going to be having a bit of a chat, bit of back and forth, see exactly what Nick's been getting up to in the property space. So do you fancy telling us a little bit about you? Obviously I've seen a little bit and I've gone through your Instagram earlier today. Cool. Just seeing what you've been getting up to, cool, just fire a few questions at you and what have you, but yeah, give us a bit of background if you don't mind.
Yeah, so I started my journey in 2012, so over a decade ago, in property. So I initially started sourcing properties. I didn't have any cash at all, and pretty much utilised the profits from the sourcing business to build up a portfolio. And we've still have a sourcing business at the moment. Currently at the moment we have our investment companies where we hold assets, so HMOs. Don't hold any buy-to-lets anymore. I kind of turned them all into HMOs as I kind of grew itself. So I've actually just bought one buy-to-let, just the numbers stacked up recently. I've done service accommodation. We do HMOs, anything from like a 3-bed non-licensed all the way up to like we've got a 14-bed going on at the moment.
That's okay.
Yeah, which is cool. And we recently started our own construction company back end of 2022. So been running that for the last year and a half. And that's been just a game changer for everything within a holdings company, sourcing company, a lot really. So my focus now is just building and growing our portfolio really.
That's okay. So you started deal sourcing, deal packaging then for other clients then?
Yeah, I did. I mean, at the time, I didn't have any money at all. Like I bought, probably a lot of people in property that invested in themselves in education. I had to put that in credit cards, personal loans, whatever I needed to get started. So I didn't have money for deposits. Family's not really got a lot of cash, so I can go to them. So it was just kind of building up credibility. Quite the amazing thing is a lot of my sourcing clients have been with me for years. They're kind of happy with their portfolio, and now that they've started lending money to us, so we give them a fixed return on their capital, and leverage it into our portfolio so they can be completely hands off, you know. So
yeah, sometimes it's like you've got to get your face out there, and it's not just a case of initially opening that door for people to lend money to you to actually raise finance. You've got to start somewhere, and deal sourcing's a good place to start. It's kind of where I cut my teeth. It's what I did for over a year in order to be able to do, because I'm in similar circumstance. It's, you know, although I run a building company, you know, there's a lot that goes with it, and any money that we've got is tied up in the company. So yeah, I had the same issue, not really got a lot of money, so deal packaging, deal sourcing was kind of the natural way to go. So I mean, how long did you do that for? I take it you're still doing that as we speak.
Yeah, still doing it now, not on a massive scale. I mean, we got up to a point where we're doing 16 deals a month, just continuously.
Some serious turnover.
It was, that was a very stressful year. A lot of systems and processes that gone in place ever since then, but our main focus now is just building our portfolio. So we still source at the moment. This year we're only going to source 12 HMOs. That's all we're going to do, because we want to really put a massive focus on our portfolio, get it where we want to by the end of the year. We'll still source. We've still got clients that buy for us regularly, and I enjoy it. I enjoy working with people that I work with in the sourcing space at the moment. You know.
So obviously, let's go back then to obviously when you started. What was your why? Why did you want to get into property?
Yeah, a lot of stuff really. My mum and dad. My dad got really ill, and I kind of seen my mum and dad lose absolutely everything. Right, house, the lot, completely, and it was a series of events that kind of got him to where he unfortunately lost his job. He was in a really good, high-paying job, and I was kind of made the conscious decision where I decided to kind of help my family, sort them out, you know, financially, etc. And I was working like stupid hours at work.
What was it you did then before?
So I worked in a call center. So I was sales team manager at the time. So we had about 12 people underneath me, managing the sales team. And we worked on like 3 on 3 off. So it was like perfect shift pattern, do 12 hours, 3 days on, 3 days off, and it didn't really feel like a lot of work. But when I kind of made that decision to help contribute, that went to like every day, like 7 days a week for months upon end. And I kind of sat down and remember sitting at work once, and I remember the moment I sat down at the desk, and it was this kind of moment I was like, is this what life actually is like? And is this what's going to be for the rest of my life? Because if it is, like I've got to change something. And just kind of series of events kind of happened. Like I'm really grateful for my mum. She gave me a book called The Slight Edge. Have you ever read it?
I've heard of it, and it's on my list to actually read.
It was one of the first ever personal development books I ever read, and I hated reading at the time. Like, got dyslexia, just didn't.
Yeah, same. Same.
And like hate
anything. Audio books have been a massive thing for me. Yeah,
massive, man. And it's like anything to avoid reading, I would do. But I picked this book up, and it was just like page after page after page, and it was like speaking to me. It was just the simplicity of like consistent actions. You didn't have to be perfect, you didn't have to be great at something, but you had to just have that willingness to be able to go in, day out, do consistent things over time. Eventually you get better and better. And that book kind of set me on to other books. So read like Rich Dad Poor Dad, you know, Tony Robbins, stuff like that, and that's kind of got me down the path of property. And initially, like, I bought Rich Dad Poor Dad because I thought, well, if I can learn to like trade and, you know, learn how to do stuff in the stock market, I can build up deposits to buy houses, and then that got me in like, oh, you can use other people's money, you can do so it kind of went down that road.
It's really quite spooky because obviously I got into it probably quite a bit later on in life than you, but it's a very similar circumstance. I think it takes that pivotal moment in your life of something not quite going right or going wrong. Kind of with me, it was my dad passing away and not really leaving a great deal, and it puts you on that trajectory of thought of, like you've just said, is this my life now? Is this how it is from now on? Is it going to move on? Or, you know, is it going to get any better? And obviously, that's kind of give you your spur to move in. Yeah,
massively. And like, I'm so grateful for those events that happened at the time. It was like massively emotional, you know, very hard to kind of go through mentally, emotionally, for myself and you know, everyone involved. And that for me was making that pivotal moment. Like, I'm so grateful for it because I wouldn't be where I am today because of it, you know. And it makes you I was forced to kind of grow up really, really quickly, and take responsibility for my own future, my own
what kind of age were you at that point then? Is that
at that point when I got in property around about 22, 23,
still relatively young then?
So but that was all happening from like age 18 to like age up until then, but just kind of really forced me to kind of grow up a lot quicker. So I'm grateful for it.
So obviously you mentioned education. Did you go to any specific education provider within property, or?
So that provider's no longer around. Some people know him as Tigrant or Legacy.
Right. I've heard of Legacy.
So grateful for it. Learned so much from it. You know, that was kind of a kickstart to kind of learn how to do with it. I just literally dove in, and whatever I could consume. And even before that, anything that was free, you know, Robert Kiyosaki material, anything like that, I was just literally consume it, learning about balance sheets, assets and liabilities, cash flow statements, anything to get my financial knowledge, because I just knew that I didn't want to be in that same position. Took that on, and I remember before mentorship, we like put out 60 offers just before mentorship. And it was crazy. And then I realized, I've got no fear about putting offers out, especially like stupid offers that some people would consider stupid. But I was taking it was one of the things, like just one little pivotal move. I didn't get any accepted before my mentorship, but I was taking like the asking price, then taking off my refurb cost, then taking my cost of finance, then taking off all my costs, then putting my offer in, rather than working from the back end value of what the forced appreciation would be. That was an eye opener for me, because we got deals accepted straight away after. But yeah, I was putting like 75% below market value offers in, completely oblivious.
You'd have been quids in if one had landed though, wouldn't you, just to get you started?
Yeah. So, but
I mean, sometimes it takes that. Sometimes it takes a bit of cheek, and you know, that naughty offer sometimes could come by. Are you with me? It's a numbers game, I suppose, isn't it?
100% it is. And at the end of the day, as you go on, now we'll kind of view 5 offers. We'll probably view 5 properties. We'll buy 4. You know, that's our ratio at the moment, and our conversion ratios. And the reason for the doing is we're very specific on what we buy, where we buy. We know the streets. We know exactly what type of building sizes, exactly. So when we're viewing it to buy it. We're not viewing it just to get an offer out there. And it's a different mentality. We're very, very specific on what's either our clients are going to buy or what we're going to buy.
What yours or your criteria is, Yeah. So I take it you're an advocate of education then within property.
100%, I am. You know, listen, there's a lot of people out there that I think shouldn't be educating, and there's a lot of
high ticket education at the minute that probably should not be high ticket.
I would agree with that. Yeah, there's definitely. I'm quite a different person. Obviously, I paid like 25 grand on my initial investment. You know, to do it. It was well worth it. Yeah. I've paid a lot more since, and I'm and I'm okay with that. You know, some people. I think there's this certain type of people that need that high ticket to give them a kick up the arse, to be able to do something. And there's some people that don't actually necessarily need. They just need a bit of guidance, etc. You know, take prosperity for instance, like brilliant. You know, it's kind of more of a subscription model. You know, that will suit a certain type of individual, but there are people that charge in a massive high ticket that shouldn't be. And you know, people will know who they are, etc. And I think at the end of the day, it's like, it's got to be down to the individual, and
that's where we stand on a different platform now. It's kind of, we've been in the industry, well, you a lot longer than me, to be honest, but you can pick out those people that 100%. Shouldn't be selling it, whereas the beginner, they see a nice glitzy advert on YouTube or
nice flashy car, whatever it is,
and it pulls them in, and that's the problem with it, isn't it? It's not regulated.
It's not, and it's unfortunate. And the reality is, unfortunately, I mean, there's certain people, I won't mention names, but there's certain people say, oh, you can get financially free in property in 7 days and all that. It's totally bullshit, you know. And the reality is, I could sit there, point facts out of facts to the facts, like, listen, you can't do it. You can go, yes, you could go get a lease option and secure stuff, but the reality is, even if you do it service accommodation, you need like 6 months worth of track record, booking that up, start getting momentum on your bookings and your reviews, etc. They're not going to cash flow positive like from day one, you know. So you've got to be very specific and be aware. But unfortunately, you know, there are people there that are naive, but that's not down to their fault. It's down to the lack of knowledge and experience. Yeah,
same in any industry, I would imagine, isn't it? There are people out there, charlatans, that are looking just to take advantage of a situation. So. Well, you've just mentioned knowing your area as well, and that's something that's quite, you know, that rings a lot of bells with me. It's kind of, I think it's massively important that you know your area. So what areas is it that you invest in?
So I've invested in a few areas. I change area when it's strategy specific. I always keep strategy first, area second, and then property last, you know. I think if you can focus on that kind of sequence, you can't go wrong. You know, a lot of people go and buy a property and then think, oh, what can I go do with it? It's what is the strategy you're going to do? So I've invested in the Northeast, from like Sunderland. I had a portfolio there. I sold that off in 2017. I just had some really good offers from a estate agent I referred to, and I was like, listen, if you get me this, I'll sell them off market. I've got stuff over in like your Middlesbrough Redcar area. We do a lot of stuff with the council there, and then we also do stuff in the Northwest, which we do our HMOs, very high-end spec for professional HMOs, etc. So we do social housing, and we also do that as well. So
yeah, I've seen a bit earlier when I was just having a flick through your socials that you've got quite you seem to push a lot towards the HMO strategy.
Yes,
but the diversification within HMOs is quite broad, isn't it? So yeah, I like the idea that you're actually looking not for a property to fit into a bracket, you're looking for a bracket and slotting a property that fits 100%. Into that. So it's the opposite way around, yeah.
Definitely, and there's a massive differentiation on what you're going to provide for a social housing property. You know, whether that's Serco, MEAs, whether it's direct to a charity or a council. We're very fortunate. We've got contracts directly with councils. Very, very hard to get. We've just secured for another 10 years on those contracts, and we've got great relationships where we're housing homeless off the streets and put them into accommodation to move them on and do things better. But you're not going to go and provide and spend, you know, tens of thousands of pounds on a HMO where you're going to be replacing fire doors every couple of weeks because they get kicked in or, you know, they don't look after the properties. You want to provide clean, very simple, low maintenance, very safe houses for that. Well, the other perspective, where you're doing your high-end stuff, you know, you are going to provide a better quality kitchen, better quality, you know, beds, etc., and all that, because your maintenance are very low if you do it correctly. So, yeah.
I mean, we had this on the last podcast and the one before, I think, about HMOs just getting a little bit out of control. I think with the spec, it's kind of they're getting to the point now. Whereas, I mean, I'm all for it, to be honest, because it's some of them are stunning.
Yeah.
Some of the things that you see, especially in the network that we're in, Prosperity, there's a lot of people
do some awesome stuff.
Some sensational things. But do you think that it's getting to the point where it could be going a little bit too far, that they're spending a lot of money on a product that's going to deliver the same return?
I think where a lot of people go wrong in any HMO market is where the specs came in was people think, oh, well, people are providing a very basic brown magnolia walls, you know, no en-suites, HMOs. It worked, £70-80 per week, etc. Maybe £90 per week for larger rooms. And where I think the problems start coming in is people come in and say, well, I'll provide a better spec, better quality, but I'm only going to charge the same rents. Or maybe I'll charge just £10 more. Where HMOs are done beautifully, and it's understanding how you can actually, its product position is saying, right, okay, well, what is the majority of people doing? What is actual demand? And really comes down to your tenant profile as well. Like, who are you trying to attract into that property, and what are they actually wanting? We've tweaked our HMOs massively, especially in our professional aspects, where we've got surveys out to tenants. We've stayed in some of our HMOs to get actual feedback, how the actual tenants are moving around. And it's spending money where it's needed to be spent rather than just the decor, etc. But if you take something that's a higher end to the market, go create a new bracket. Put it on for higher rent. You're going to attract a different type of tenant profile. So like we're getting £140, £150 per week per room for our HMOs, where if I went in something low end, I might get £70-80. As for spending too much, I do think in some areas, and some people are doing it, they get a bit too emotional. It's about trying to... For us, we go back to brick. We like to make sure we've done everything in the infrastructure behind the scenes, where you don't stuff like your rewires, your full heating systems. We are putting en-suites in. That's where we like to spend our money. You know, the decoration.
Well, that's almost future-proofing, isn't it? There's things that people don't see. The fancy stuff that everyone sees. Yeah, it's very commendable, and it looks great when you stick a camera in front of it. But what's beneath the scenes kind 100%. Of thing, and is it going to last? And you know,
I like predictability. So I like to know, it's like, right, okay, the only variable I have on that is potentially there might be some roof issues, because if I don't need to replace a roof, I'm not going to, you know. But I like to know I've got a boiler in there for a 10-year warranty. I know we've got 25 years on our hot water cylinder system. We know that the wiring's all good. We've got 5 years on that for a cert. If regulations change, we'll take the consumer units. So I like investing the money up front, so I get a predictable return, and my return on investment's a lot more solid. So rather than I can say, oh, I've got 50% ROI, 60% return on investment, but I've spent very little on my refurb and it's all cosmetic, not anything underneath the surface that could cost me a lot more later on.
Yeah, because I think that's the big thing with HMOs. They do get a lot of traffic. You know, they get used pretty well, whether they at the lower end or, you know, at the professional end, they're still going to get used. So ultimately, people are taking out these big commercial valuations, refinances on them, and not realising within 5 years you're going to have to start replacing bathrooms and maybe kitchens and things like that.
Yeah,
that's got to be, you know, looked at and bared in mind, kind of thing. Are you with me?
Yeah, 100%.
So, and it's that's quite refreshing, to be honest, to see someone that is actually looking at that. But I would imagine the actual starting up of a building company has made you look at things in a different light as well.
Yeah, definitely. I mean, we've project managed a lot of, I think we've done over 400 projects now in the last 12 years. So
some going now,
you know, so, and a lot of it's been, we've been involved a lot of the build process from start to finish. So even before then, and looking at, I've been able to see, like, from when I started on like just a buy to let, very small refurb to now, and looking at my portfolio over time, what has been the better performing properties over, you know, 5-year period, you know, 6-year period or longer. What are the reasons why I've had higher maintenance costs, other things? What do I want for me? You know, some people might want to spend as little as possible because they might just be starting out. Yeah. I'm in a position where I've built.
Well, I'm looking forward to being able to create that kind of data over 5-10 years to know exactly what does and doesn't work and things.
100%. You said a key word there, data. Yeah. A lot of people forget about the data. Yeah. It's looking at, like, are you tracking, like, where your maintenance is coming in? What is that from? What things are you tracking in your business to make factual decisions rather than actual assumptions? You know, and that's what you have to, at the end of the day, it's a business that you're running, and people forget that I'm just getting this property thing to get financially free. Well, actually, are you doing it for the short term and long term? Because if you're going to do it for the long term, treat it as a business from day one. You know, start getting regular accounts, you know, just make sure that you understand your numbers all the way through. But back to your thing where open the building company, that's definitely opened our eyes, because we've been able to see the material fluctuations, we've been able to control that, see where it's best to actually spend more money as well. And we can, I've really enjoyed it. It's been a hard, like, struggle last year, but we've expanded the team, and now we're in a great position. You
generally see a lot of investment companies and, you know, personal investors will branch out into that area, because from, you know, I'm a builder, I've done it all my life, so I've come in from the opposite end. Are you with me? Yeah. Whereas a lot of people do go out, they start a building company, and I think it's due to the fact that they just get messed around so much by builders, and
that's the reason why we done it. Yeah. Our previous builder couldn't cope with the capacity we wanted to run at, wasn't running it correctly, you know. It got to a point where we were having to hold payments because he wasn't doing works up to where it needed to be, not in the time frames it needed to be, and it really came down to what wasn't running the business like a business, didn't have control of his numbers, didn't know what was thing. He was trying to get cheap labour in to do stuff, then having to pay again for somebody to come and redo it.
Well, you will find a lot of people in business, in construction, when I say business with a very loose term, is they're not actually running a business, they're actually working a job.
Yes.
They've basically gone self-employed, maybe because they couldn't find any work at a particular point in their life. Yeah. They've stuck with that, and they just work from week to week. A lot of them do. They're not running a business, and it can be frustrating. There are building companies out there that do run it like a business, obviously.
Oh, massive, and they do. But
you'll pay a premium for them, are you with me?
And this is where people don't get, especially as investors, because a lot of training companies out there, this is like, get your refurbs as low as possible, get this, you know, your money's made when you buy. Well, actually, your money's made where your refurb is. Yeah. You know, I think is Paul Tinker, he said something like that. He said, your money is made with your refurb. I was like, he's 100% correct. You can negotiate as much as you want, but if I've got a building company who's running the business like a business, and they've got that going, and I can get that done in a shorter time frame, and I can get off my bridge a lot quicker, I can get rental income, etc., rather than going to somebody who's really just, like you said, like in a job, that doesn't mean they're bad at what they do. They just don't know how to run the business elements of it. That could take, say, double, triple the time. That costs a lot more long term.
They're only looking till the end of the week, basically.
Exactly.
They're looking, if they've earned enough money for Friday, it's not an issue whether you're on target or behind schedule or anything like that. As long as they've got their payday on that Friday, they're happy. And that's what they set out to do within their business. So, and I mean, everyone tells you within property to systemize, which is, in my opinion, amazing if the people you're working alongside are systemized as well. Your solicitors, your brokers, your builders, all that kind of thing. So
I think a lot of that comes down to you as a leader as well, because like I've always been a massive fan of like processes and systems. Having processes and the systems run the processes, and it's never ever perfect, because the system that you're going to be running today is probably going to be outdated in a year, and you're going to have to upgrade it.
You'll always find something better than
because you're always improving, right? And as a leader, you have to really have that in the forefront of your mind, because we can quite easily, I know myself, get stuck into the day to day, and it's having people come in that run the process how you've run it. It's up to you to determine what the ethics, the values of the company is, and how things should be done, and then bring somebody in that's better at you doing it and say, right, how can we prove this, as well. And it's not always going to go to plan. It doesn't, but if you're always tweaking...
There's teething problems with everything, isn't there?
100%.
That's kind of putting a system in place. It takes time to actually get it there.
It does. It takes years,
Yeah.
and I think people try to do things overnight, expecting it's going to happen overnight, but it doesn't necessarily go that way.
So how's the building company going then? Is it
it's going really well.
Worth actually putting the effort in to set up?
Yeah, it has been. I mean, we obviously opened up because we just kind of got sick of that, of the situation we're in. It's just been like it's been a game changer for us.
So are you just doing your own works, or are you
we're doing clients that we've sourced to? They know everything's in house. They get literally a predicted result. We can give down to the day that the keys are going to be handing over. We've got it down to a T like that. I've got to give thanks to like Michael Arman guiding us on that. I'm really good mates with Michael, and I phoned him before we made the decision. I said, listen, this is what I'm on. Can you give us the guidance of what the perfect build company should look like from a systematic point of view? What people do we need, and etc. So we've done a lot of prep work, and then just hit the ground running, really. So we do a lot of stuff for our personal portfolio, and then we also do for our clients as well. So we're just about to take on I think it's a 5-bed HMO for somebody who's external to our sourcing clients. So it's the first one. We'll see how it goes. But I pretty much like how the setup we've got runs a lot smoother.
I mean, I found personally within the investment world, it's like people struggle with builders. So if you've got a good setup, I can't see why not that you can't branch out, that you can start doing it. Ultimately go national with it. That's what we're doing as a company now. Awesome. We're looking to do that. Yeah. But you hit the nail on the head for me with the being able to start when you get the key. That's where I've massively catapulted forward over a lot of people that started out in property. They'll get the keys for a property that probably took them 6 months to get through, get that deal sourced, get it right, and then the builder's then booked for 4 months later, and they're on a bridge, like 1% every month, and that's a massive thing, isn't it? Just being able to start when you need to, kind of thing.
It's a huge thing. I mean, it makes a difference, because we know we can say, right, okay, we can look at our pipeline, where we're at, where things are coming in. We're always looking 6 months, 12 months ahead, or even longer than that. We're starting now making decisions for back end of next year, and it makes it a lot easier for us to kind of really systemize things. It's like property complete, we pick up keys and we're stripping out the next day. Making sure that the sites, all the site prep work's done for the health and safety, making sure that we've got all the stuff on site as well, fire extinguishers, everything you need to. And this is what a lot of people think. They forget that even though you're an investor, you're still responsible for the health and safety on site. So making sure that their builders that they're using that's all signed, that they take care of all the health and safety, they're responsible for all that on site, because if they don't and they don't delegate and something does happen on site, the buck stops at you.
Ultimately they're the principal clients, and it's kind of as CDM regs go,
CDM,
and
that came in 2015, wasn't CDM?
And it's it doesn't matter what size project you're running, you can be changing the light bulb, it applies, and it's the law basically. So it's part of a little program that I run, and it's
nice.
People are astounded by some of the stuff that I'll come around with, and I did one last week, and I just mentioned that any property like that has been built after the year 2000 should have an asbestos survey by law. And there's just thousands of people out there completely oblivious to basic information like that. So it's something that I think that needs to be addressed.
I think so. I mean, like, especially if like you're a sourcing company, and let's say you're project managing the refurb and stuff, you have to make sure that you know that, and you're equipped to it as well,
almost
to pass on to your clients.
It kind of almost, it's why I mentioned education. I'm all for education. I think it's amazing. I, like you, went through education and paid a lot of money for it, and I'd do it again. It was brilliant. But the things that were left out were things that I know anyway as a builder, and some of it's quite vital. Are you with me? But when you speak to these educators, they actually choose to leave it out because they know it will scare people off from buying the education. But, just little things like paying a subcontractor and deducting CIS deductions and things like that.
People don't realise that. Like, if your contract, if you got direct, like as a build company, you got direct with a contractor, you have to pay him CIS. It's the same thing with if you're taking private money on board, you have to make sure that you deduct the tax at source if you're lending directly to a personal name. If it's to a limited company, that's fine, and then if you're lending to an international person, it's the other way around. So understanding that, making sure the statements are going out to the clients, they have the relevant stuff for accountancy, so they can claim back tax if they've paid too much on it. All those little things, it's people leave out.
Massive. So, and it's because
that comes with the experience.
They're all concentrating on the actual process, the actual raising of the finance and things like that, because it's so, I'll say difficult, I don't know if that's the correct word. It's not difficult when you know how and when you can put the right process in place. But people see it as difficult to things like raising finance. So they ultimately concentrated on that and not looking at the bits that they were going to have to do when they've actually raised the finance. And the fact that you're going to be dealing with hundreds of thousands of pounds of other people's money.
Which is a responsibility.
That's massive responsibility.
If you've got to make sure that you're doing everything you need to in the back end to make sure that you're paying that money back. It's a responsibility. If somebody's actually gone out there and they've worked hard and it's their savings, etc., stuff like that, you want to make sure you're putting that back into the bank plus more, and you want them to speak back to you, to recommend you as well. There's a lot of things that are left out, so I think it really comes down to you taking a responsibility to
ultimately
to
you need to know that you're doing things right, and you need to do your research basically. So obviously we've just mentioned raising finance. How did you find that when first starting finding those investors and then moving on to raising finance for yourself? Was it?
I mean, a lot of it, I haven't actively gone out and raised finance a lot. So we have raised quite a lot of angel finance. A lot of it's come through like people that unfortunately have had a death in the family. They know that we give a better return than the banks, and then they come to us, we speak to them. So that's we've kind of just fell into it really. When the deals come, the money comes to it. And we've got a lot of sourcing clients now where they're just like, listen, I'm cool with my portfolio, I don't want any more, but I'm happy for you to give me between a 6 and 12% return per annum, depending on what capital put in. And we tie them up for a couple of years or however it needs to be, So that's been us. Now for us this year, we're actively pushing it a lot more because we want to build our portfolio where we want to. with the plans of expanding our portfolio. So yes, we now actively pushing a lot more social media, reaching out to our clients, as well. So that we built.
Yeah, I mean, your social media is really good. I've just literally had a quick flick through before you arrived. And obviously, I've been following you quite a while, and we know each other through Prosperity. We had a bit of a chat on Saturday, was it?
And we did. Yeah,
and it looks like you're doing really well on there. So, I mean, what do you do for fun then? Hobbies, things like that? I see you like a lot of travelling and what have you.
Love travel, yeah. So my partner Jill, she loves travelling.
Is Jill into property herself?
She is as well, yeah. So she has her own separate company, and she's part of the construction company. Takes up care of the accounts, all the numbers and that. She's got a phenomenal experience within accounting. So she dealt with the large supermarket company, where she used to she was basically the person in control of managing all the finances for the construction element and buying of all their supermarkets and stuff. So she worked in London doing that. So she used to managing billions under
I think having your partner involved and kind of almost on your side is massive. It's one thing I've noticed. My wife is not strictly against me doing property, but she hasn't got the interest. Are you with me?
And that's fine.
So and it can be quite, it's quite a lonely thing. I think property. Sometimes you can be sat looking at a deal and working through the motions, and before you know it, you've spent 8-9 hours on your own. Are you with me? And it can be quite lonely. So having like your spouse or your girlfriend or whatever involved as well, I think that's really valuable. It
makes a huge difference. I mean, we have we both have an understanding. It's like, listen, if we need to knuckle down and just work until the evening or do whatever we need to because we've got deadlines to meet, we've got that understanding and respect, and it's kind of, we just let each other do what we need to do. But then we're also having the time where we do turn our phones off, and we'll go down to the beach, go cycling or whatever, or we'll go traveling. So the great thing about property, we've created the business. I think it was in 2016. Made a decision to make the company go fully digital. So when COVID happened and all that, it didn't really affect us from a logistics point of view. We just carried on.
Yeah, because you'll have been going during COVID, weren't you?
Yeah. So
how did you find that then? COVID
I think it was crazy. It was
a crazy situation anyway, wasn't it? But
and we've still done deals through it. We've still done quite a few. We really played at the beginning of it. I was lucky actually at the time. I was in a mastermind in America. And this guy called Naveen Patel, he was in it as well, and he's had quite a lot of exits in some tech companies in the US, and he invited me to come into his mastermind. He was teaching people called, I think it was Innovation Bootcamp, and he was teaching us how to innovate the business and from a tech point of view. And he got wind of what was happening over in Hong Kong and stuff like that, and we got wind of from our clients, because we've got a lot of clients in Hong Kong. So he literally stopped the program straight away, and he says, you need a crisis plan, and you need it now. And he literally pulled his out, and he turned around and he said, right, this is what you need, this and this sector, so in the event of this does happen. And there wasn't any talks about lockdowns or anything. This was like January of 2020. Or anything like that, and so luckily we were able to put things in place. But yeah, I mean, the first lockdown happened, it was just crazy. I think everyone just couldn't get it, but we had, at the time, we had about 4 conversions going on at the time, and it was just tools down.
I mean, obviously, I wasn't strictly in property during lockdown, but obviously I was building. So, and it was a case, at first we were just like, say, down tools, right, now what do we do? And it was, you were actually, I forget what, essential service or whatever they called it. So we were allowed to go and work, but the problem was all the merchants were shut. Yeah. So how can you work without material? We had a nightmare.
We had 2 properties at plaster stage, and we could only buy 10 bags of skim, literally. So it's like 10 bags of skim at one time. So you're going around to merchant to get loads of skim.
Travelling the country.
You needed 60 skim for a house. It's like, oh, mad.
Yeah.
So that was crazy. It was just trying to get whatever you could wear, and it's just mental, isn't it?
So would you say then, obviously, property has give you that kind of lifestyle that's allowed you to travel, obviously, because it seems like you enjoy it. Do you think you would have gotten that if you'd have carried on in the call centre?
No, I definitely wouldn't have. I mean, that's the reason why Jill got into property. She wanted to go travel for like 3 weeks, and I can't remember where it was, and the boss said, well, the only way I'm going to allow you to do it is like if it's like as a like a honeymoon kind of break or something. She was like, oh well, okay, that's fine, but I'm not going to be on a honeymoon every year. Like, I'm not getting married. So that was kind of her shift, and she just wanted to travel, and that's what she does. You know, she'll go away with the family. She's off to Florida end of the month with the family, and for 2 weeks. We went to Bali for a month in February. And we're out there again for a month in October. So
it makes all the hot. I mean, people only see that side, though. I think that's the problem with a lot of social media nowadays.
Yeah.
And I've noticed on yours, you do keep it real. You know, if there's a mistake, you tell people. It's
damn right.
Yeah, a lot of people just
anything.
show the good stuff, and and ultimately, you know, you're going out and you're enjoying your travelling and stuff like that because you've worked hard for it.
Yeah, damn right.
You know, I mean, you've just mentioned the saying up there: "Hard work beats talent," and it's bang on right. Sometimes you've just got to work hard for things and put your all into it. Are you with me?
Yeah, exactly. And there's so many people expected to kind of just fall onto the plate, but if you're not willing to put in the work, it doesn't matter what course you buy.
Yeah,
you can drop 20, 30, 50 grand on an investment training.
Yeah, they'll put 30 grand in and fail.
Nothing.
Yeah.
You know, and it doesn't matter if you fail. It's whether you get back up and do it again. And I think that's something that, you know, I'm proud of myself about. Is like, when I get knocked down, get the fuck back up again. You know, and that's like, you've got to have that resilience within yourself to say, like, listen, okay, do I feel shit? Yeah, I do. Am I having a crap day? I am. But let's just take one step. Yeah. One step. Because if you take that one step moving forward, there's somebody out there that has just quit and you're already 2 steps ahead.
Yeah.
And that allows you to move forward.
1% each day, I suppose, and
100%.
Just keep moving forward, and things will knock you back. But if you keep moving forward, you're going to keep progressing, aren't you? So
yeah, definitely. But so travel's one thing, and I've just taken up kite surfing 2 years ago. So I'm like trying to master
my
that
old
this
man
year.
was still here. My old man, he taught kite surfing.
No way, really?
Yeah, he did barefoot water skiing and
cool.
kite surfing. Surfed some of the best people in the country. Yeah.
Oh, phenomenal.
But obviously he's not with us now. He's that's kind of what got me into property. Like I say, my dad really enjoyed his life. We together we did mountain biking, trails, anything you name it, we had to go at it. But he really enjoyed his life, but really couldn't afford to enjoy his life. Really, are you with me? So when he did pass away, it was early. He didn't expect it during COVID, and it was just a massive eye opener for me. That was my pivotal point. That when I pass away or when I want to retire, I've been a builder all my life. My hands are tired, my back's, things like that. And it's a case of, am I going to provide for my family without actually grafting and working? And that's what I saw, that property was the obvious choice. And like you, I looked at stocks and shares. I actually tried an index fund.
Oh, did you?
Yeah, put some money in an index fund, left it there for a year.
Yeah.
And it did nothing. It was crap, and I was like so disappointed at the end of the year. So property, I landed on my feet slightly because my first deal was a lease option.
Oh, nice.
And it's it's not probably the easiest thing to do for your first deal.
It's not, but that's hats off to you for doing that, because a lot of people promote lease options very easy, but it's very complex from the negotiation point of view, put it together, etc. The legal's point, if you've got a really good solicitor, the legal's point of view, like, super easy. But
I had a solicitor that writ the option up. It was brilliant. It was perfect on paper. 6 months down the line, we found out that the guy had been struck off and shouldn't have been trading. So we had to go back and get it rewritten, and I was scared that the vendor was going to pull us, that the fact that it was no longer legal, and it was a nightmare. But ultimately, I grafted my nuts off on it. It was inland Hood now, so I was travelling an hour and a half, 2 hours every day to sometimes I was staying on a camp bed. But I did it, and it come down, and we made real tidy profit. Well, I'll say I made a nice tidy profit on it. So that's kind of what. Yeah, I think if that had gone a bit pear shaped, it might have been a different story. Might not have been set here now talking about property. So
no, that's good.
But yeah, that's
as long as you learn something out of it. There's no problem something going wrong. It's what learnings you take.
Yeah, it's
from
getting
it.
yourself, like you say, dusting yourself off and just keep moving forward. So
yeah.
But good. Yeah, we're up to 45 minutes now. So yeah, really good chat, and I really appreciate you coming.
Yeah, brilliant.
So if anyone wants to find you, where can they find you?
Best place, Instagram or LinkedIn, Property with Nic Clark. That's NICCLARK. So just drop me a follow on there. Obviously, if you guys want to get involved with our angel investment, then definitely there. So
yeah, brilliant.
It's cool. Thanks very much. Thanks for having me.
Thanks for tuning in, guys. I'll see you again at some point in the near future.